Good afternoon. This is Ken Long from Tortoise Capital Management, and I want to take a quick look through the August 1st weekly strategy report and see what we can see. Page 1, we're taking a look at the highlights here. Markets in bull quiet. Global is outperforming the U.S. Japan is the weakest sector. Emerging markets, Latin America, and anything technology are the strongest. Volatility is at the low end of a three-month range. The ADX is strengthening with bulls in charge, meaning that the bullish move is getting stronger. And we'll see on the world market model where that strength can be found. Certainly what will stand out is that commodities, energy, and oil are exceptionally weak, with the anomaly of coal, ETF symbol KOL. We'll see that. On the intermediate term, ETF2 posture is 100% invested, but the market is overbought on a short-term basis. Now, it's been that way for 10 days, so it can keep going overbought in a bear. All the commodities except coal are lagging. What we're calling cows, the Dow Jones 30 industrial candidates like Alcoa, Coke, Kraft, Johnson & Johnson, Caterpillar, Disney, and McDonald's. I would add Merck, symbol MRK, to that. Have been very powerful. Moving on. So a quick look at the market health check. We can see, starting from the top, we're still in bull quiet mode. This is the volatility line has been declining. This black line is the ADX 14 line that's increasing, so we see that trendiness is stronger. And green above red means that the bulls are in charge, which we can tell by inspection anyway. In terms of price action, we can see there was a long period of sideways movement in these red, blue, and red boxes. Significant support at the 88 level in SPY. And now we've been in this greenish area since we got back into the bull, and it's been a stairway to heaven, as you can see. Although these two dojis at the top, where we've not been able to make a new high above 100, is of concern when you combine that with the market being up 12 days in a row. Looking at short-term indicator, this Williams percent R10, every time I highlight in green is when the indicator has gone below the minus 80 line, which indicates short-term oversold. That's normally a contrary indicator, and as you can see, when it was oversold here, there was a nice pop that followed. When it was overbought in the red, we've seen a nice pullback. Again, it comes back to oversold conditions. We saw a nice little bump again. Overbought, pulls back. Oversold, and then that really lets it rip. Now, this is not a predictor, but it is an indicator that things may be pointing in one direction or the other. For example, even as early as 10 days ago, the market had reached overbought conditions, but as you can see, it continues to march. So this is an alert to potential reversals, but it's not an indicator for action itself. So that's the health check. In the benchmarks, you see ETF2, which got back to fully invested last week, starting to catch up to the S&P once more. The regional world market model, EPP, has the uber strength with a 72 and a green light. That's clearly the place to be. And if you don't want to fine-tune ETFs with more precision, just buying EPP gets you exposed to that level. 100% invested exposure again this week. See, EFA is better than SPY, so the global is better than the U.S. And inside the U.S., it's mid caps, then small caps, then large caps. An expanded world market model with some details. You can see that the commodity areas have been crushed as compared to the equities. Inside the sector spiders, you can see that materials, financials, and technology have been leading the way. Consumer staples and utilities, the defensive sectors, have been suffering. So I think money is moving away from security and more towards growth. And you see that trend reflected in the global business sector extract as well. In the world market model, the radial version of it here, you can see all the green lights flashing for strength in Asia less Japan. You can see all the commodities getting crushed. U.S. kind of in the middle. The one anomaly in Europe is Sweden, and that one trades greater than 100,000 shares a day. So that may be an opportunity still to buy pullbacks in strength in that sector. But I'd be cautious with a small equity market like that. Over here in the currencies, the dollar up is in the red, meaning that the dollar has been crushed, and that is a potential play if we see a reversal of that macro trend. The dollar up ETF may have some room to run if it reverses. The 100 by 200 crossover system is a very slow regional model. We can see the strength signals are in technology, materials, technology, again, the S&P technologies, global markets, and semiconductors, which have been leading the way with strength for technology. The top 30 ETFs by daily dollar liquidity. You can see a quick scan through here. You'll see everything Asia less Japan jumping out at you. There are a few anomalies I'll point out, like coal, Sweden, home builders, home construction, ITB. That could be of interest. You'll see semiconductors and a couple different flavors of that, SMH and IGW. But everything else you see is China real estate, Singapore, South Korea, emerging markets, Hong Kong, golden dragons, China 25s, Asia less Japan, the BRIC index, Malaysia, global materials. All these things are showing you where the economic strength is. And finally, the ETF liquidity report. This lists them in decreasing order of daily dollars traded. You can see the spiders at 22 billion a day account for more daily dollar activity than the rest of the next 29 combined. The ATR percentages, these highlights in green are ones that are exceptionally volatile and therefore are interesting intraday trading candidates. This one right here, IWM, is the Russell 2000 index, number 3 on the list, and trades at 4 times the daily liquidity of the NASDAQ 100. And I think that's because it's a favored trading vehicle among the futures areas, and that's one that I personally got to pay a little more attention to. So this one will tell you the 30 most liquid ETFs for people looking to get long or short or trade with minimum bid ask spread. So that's a quick look. Thanks for your attention.